Are you curious if now is the right time to buy or sell in Dalton, Georgia? Stick with me until the end to find out. Once again, I'm diving into the real estate market for Dalton, Georgia, and then taking an overview at the overall national market. I'm Josselin Iraheta with eXp Realty, serving Dalton and all of Northwest Georgia. Before we dive into today's market numbers, I want to invite you, if you're thinking about moving or just curious about your options, to book a Canley call with me. The link is in the description, and I'll love to walk you through your personal situation one-on-one. I like to compare and contrast this month, which is August, to the previous month, which is July. So I am back here in my computer. First of all, we started looking at the MAI. As you know, the MAI, this is our market action index. And first of all, it tells us if it's a seller's market, if it's a buyer's market. And right now it's at 30. And although it says slight seller's advantage, it's actually a balanced market. MAI 30, the market is no longer firmly tilted towards sellers. That is considered a balanced market. In July, we saw prices peak for summer. If you remember the last month median list price, it was higher actually than it is today. Right now, we have it at 332,449.50, which last time it was in the 300s, but much higher than what it is today. But by August, things started to cool off. This is seasonal. It's actually very common to see sellers list higher in spring, summer. But as demand cools towards fall, prices soften. The price decrease percentage is higher this month than it was in July. Right now it's at 57. More than half of listings, 57%, have taken price cuts, which is a strong signal that buyers now have leverage. Last month it was, the latest it shows me in July is July 25th, and it was 33.33%, but now it's almost double. Sellers are adjusting expectations to meet buyers where they are. When it comes to inventory, more homes came on the market compared to last month. Once again, you won't see crazy numbers around here. So last month it was 13, 12, and right now it's 14. So we have a little bit of more inventory. More homes on the market, it gives buyers more choices. And then the average days on market, it has also increased. This is another sign of a cooling market. Buyers are taking longer to commit. And I'm focusing on the median days on market. As if you notice, we have two. We have average days on market and we have median days on market. And I'm going to focus on median days on market, which is right now 67. The latest it shows us is August 29th. As you know, this goes by the week. It's not that you'll be able to see every single day. You'll be able to see every single week. Then it shows July 25th, which was 49 days on the market. So now it's taking longer to sell. And I like to focus on median days on market because it gives a clearer picture of the typical selling time, because it's not distorted by a few extreme cases, as opposed to the average DOM can be skewed by outliers. For example, if one house has been sitting unsold for 400 days, it will push the average up even if most homes have sell faster. So this is why I focus on median days on market. So a better indicator of what you sellers can expect when pricing property is the median DOM, days on market, which is right now a little over 2 months. If we look at the median rent, right now is 1,649. Before it was a little higher, actually, a little higher. So right now it's around 200 lower than it was last month, which is more affordable. Awesome for us buyers. My advice for you sellers: July was the peak. You had stronger leverage, faster sales, and fewer price drops. By August, negotiating power started to cool. If you're listing this fall, pricing correctly will be crucial. I think I say that on every video. But pricing is so important. Last year, if you do your own research, the biggest mistake sellers made was pricing property too high. This year, I don't know what the biggest mistake has been, but pricing properly correctly is always very, very important. Because you don't list for the property to be on the market. You list because you want to sell. For buyers, more inventory in August means better selection and more negotiating room. While prices haven't collapsed, the uptick in price reductions shows more flexibility. And this trend isn't unique to Dalton. Nationally, the real estate market also tends to peak in June and July before cooling down in the fall. Inventory is rising across the country, but Northwest Georgia remains more affordable than many bigger metro areas. That's a huge advantage for first time homebuyers and families relocating here. And now let's move on to the national market. The U.S. housing market is experiencing a significant shift towards increased inventory and moderating price growth, moving away from the frenzied seller's market of recent years. Mortgage rates have reached a 10-month low, offering some relief to buyers facing affordability challenges. While not expected to crash, the market is undergoing a period of stabilization with power gradually shifting in favor of buyers. And if you have watched some of my previous reports, I have said that the market overall nationally it's favoring buyers, and right now is favoring buyers even more. Months of existing home supply is 4.7, which is the highest since July 2006. Months of new home supply is 9.8, which is the highest since 2022. And 55% home price increase, total growth over the past few years. This growing inventory indicates a market in transition, primarily attributed to sluggish buyers' demand, driven by persistent high costs, ongoing affordability challenges, and lingering job instability concerns. Builders are facing pressure to discount prices, leading to a notable reversal. The median price of a new home has fallen below that of an existing home. Did you hear that? That means it has now come to a point where it is cheaper to get a new home than that of an existing one. While the slowdown is broad based across the country, significant regional variations exist. And I have put up a map here, so hopefully you'll be able to locate better which areas I'm talking about. While the slowdown is broad, inventory remains more limited in parts of the Midwest and Northeast, though still growing. Active inventory in many areas of the Sun Belt and Mountain West has near and surpassed pre-pandemic 2019 levels. Home buyers in Sunbelt and Mountain West regions now have more leverage. The Federal Reserve's recent actions to trim interest rates aim to support broader economic growth and improve housing affordability, though the extent to which these cuts will reignite demand remains to be seen. As of August 2025, mortgage rates are at a 10-month low, with the average rate on a 30-year fixed rate mortgage at 6.56, according to Freddie Mac. Experts predict a relatively stable interest rate environment for the remainder of the year, with the Mortgage Bankers Association forecasting rates to average 6.8 in Q3 2025 and end the year at 6.7%. Fannie Mae expects rates to end 2025 at 6.4. As far as I'm concerned, and I have seen, none of them have predicted interest rates to be below 6. They predict them to be lower from 7, but higher than 6. Year over year, price growth dipped to 1.7% in June 2025, falling below the rate of inflation. Market stabilization. Some markets seeing slight price declines, 3 to 4%, but nationwide prices still up 55% over past few years, as we saw in the previous slide. Well, in one of the previous ones. Builder discounts. Median price of new homes has fallen below existing homes as builders offer incentives. The increased inventory and leading to longer selling time compared to rapid pace of previous years. This shift benefits buyers who now have more time to consider purchases without intense bidding wars. greater negotiating power with sellers, opportunity to request inspections and contingencies, less pressure to make rush decisions. While specific national days on the market figures for August 2025 are still emerging, the overall trend suggests that homes are taking significantly longer to sell than during the pandemic era market frenzy. Now, for the expert price forecast, Zillow predicts that more bearish stance, projecting a slight decline of 0.9 in home values by the end of 2025 and a 1.7 drop between March 2025 and March 2026. NAR, more positive trajectory with a projected 4% rise in median house prices in 2026. Consensus view, most experts agree that any price adjustment will be modest, with the market undergoing recalibration rather than crash. The divergence in forecast highlights the uncertainty in the market, though the overall expectation is for stabilization rather than dramatic changes in either direction. So prices not going too high, not going too low, but more of stable. Now, the interest rates projections. Mortgage rates are expected to continue their gradual decline through 2025 and into 2026. On this year outlook, Fannie Mae forecast rates could dip in the second half of 2025. 30-year fixed rate projected to settle between 5.5 and 6.5 by mid-2025. Well, we're in the mid, and it is 6.5, what you're seeing right now, for a 30-year fixed. Gradual easing expected to continue through year end. Now, for 2026 projections, general consensus that rates will continue to ease. Further drops expected to improve affordability. Lower rates potentially stimulating buyer demand could help unfreeze the stuck market conditions. The current state of the market right now, August 2025, is described as stuck or frozen, with rising inventory, moderating price growth, and longer selling times, power dynamics shifting from sellers to buyers. The remainder of 2025 continue recalibrating expected, increased inventory, and slightly lower interest rates, creating a more affordable environment for buyers, though overall activity remains subdued. Outlook for 2026, cautious optimism for a more balanced and sustainable market, potential for increased activity as rates potentially decrease further and market participants adjust to new normal. Many economists believe the market will not return to the frenzied pace of the pandemic era, but rather find a new equilibrium balance that better balances the interests of buyers and sellers. So the key takeaway for you buyers is more inventory means more options and less competition. Slightly lower interest rates improves affordability, your monthly payment, which is a big thing. It should be, because you're carrying that for years. Greater negotiating power than in recent years. Focus on individual financial situation rather than trying to time the market. See if it's a good time for you to buy. If you're in the position to do so, or if you need it, don't disqualify yourself. Talk to a lender, talk to an agent to see if you qualify. For sellers, adjust pricing expectations to reflect increased competition. Prepare for longer selling timelines. So if you think you need to be somewhere by a certain time, you might want to start that move earlier, so it gives you a good selling time frame. Consider improvements to make properties stand out. Remember, clutter eats equity. You don't have to spend a ton of money, but cleaning and decluttering can make a huge difference. Understand that conditions may vary significantly from national trends. This is a national overview. While national trends point to a more balanced market, local conditions can vary significantly based on factors such as job growth, population changes, and specific housing supply dynamics. Both buyers and sellers should stay informed about their local markets while keeping these broader trends in mind. So if you're thinking about buying, selling, or relocating to Dalton or anywhere in Northwest Georgia, let's connect. I'm Josselin Iraheta with eXp Realty, and my job is to make sure you don't just buy any house, you buy the right one. Click the link in the description to book a call with me on my Calendly, and let's talk about your goals. And if you found this helpful, please share this video with a friend or family member who might be thinking about making a move. Thank you so much for watching.